Hey everyone, thanks for watching. I have a highly requested show for you today. A lot of you like to talk about deals, and I thought no one better to bring back to the show than Greg Dickerson. He and I are going to talk about how we look at deals early. How do we know which ones to spend more time on? When do we flush them, right? They're just not worth our time. So let's welcome Greg to the show. How you doing, Greg?
Good, good, Michael. Welcome back to the United States, man.
Oh, thank you very much. There's nothing like sleeping in your own bed. As a former traveler for 100,000 miles, 100 nights in hotels, I truly enjoy my own bed. So thank you very
Yeah,
much.
yeah, awesome.
All right. So we're going to talk about deals, but more importantly, we're going to talk about them really early, like when they first hit your radar. What are you looking for? Because we get so many things that come across our table. And I don't know about you, but I think, I don't know, 1 in 20 probably warrants further review. Why don't we start there?
Yeah.
Of all the stuff that comes across your desk or your phone or wherever you get them, what percentage warrant a deeper look, do you think?
These days, probably 1%.
Okay.
Because people just sling mud up against the wall all the time. But in a normal, healthy market, probably about 1 in 10, probably 10% of the deals you look at are going to be a deal. So no matter what it is, whether it's a single-family house, whether it's a development deal, whether it's a multifamily deal, I do the high-level 30,000-foot view. First thing I look at is location.
Yeah.
I look at the asset itself. I look at the numbers if it's a rental property. What's the income they're telling me about? How does that relate to the asking price? So I look at that quick gross rent multiplier, because I know with interest rates where they are right now, what ratio of rental income to the purchase price, where that needs to be in order for that thing to make any money. So from a rental standpoint, whether it's single family or multifamily, that's a real quick, if this thing's bringing in, $20,000 a year rental income, they're asking 200 grand. That's a good ratio, right?
Right.
Somewhere around there.
Okay.
We froze up a little bit here.
Yeah, we did. It's mobile technology, but I think
Yep.
we're good. We had a second delay there.
We're
Sorry,
back
folks. We're going to keep going. So again, just to summarize that, if it's close to the 1% rule, I think you said $20,000 in income and $200,000 in price, probably going to get a deeper look. Is that fair?
Yeah. Yeah,
Okay.
that's the first step. Or if it's higher than that, obviously
Sure.
you want the most income you can get for the dollar, but that's the first thing you look at. So once it passes that test, if I'm looking at a single family cash flow, if I'm looking at a multifamily, I mean, this works if you're talking about $2 million a year net operating income, works
Sure.
the same way. It doesn't matter. If it's a development deal, it's a little bit different. So development deals, I'm looking at, number one, what's the highest and best use of the property and how do I determine that? And the value work out in relation to what can be done with the property. So you got to take a deeper look at the area, what's going on around it, what are the uses around that property, what does it look like the demand is it a lot of rooftops, is it a lot of commercial? Those two things are going to dictate what that vacant property is. It in a resort area, is it in a downtown area, is it suburban? What's going to be some best use? But I think for the most part, most of your people are looking at single family homes and multifamily, smaller to mid-sized multifamily properties. So same thing there. Every single deal I look at two things, right? So if it matches that gross rent multiplier, if it falls in the box where that looks like it's going to work, then I take a deeper look at the property itself, the area it's in, what's it surrounded by, what are the retail and office uses around it? Is it surrounded by car dealerships? Is it surrounded by laundromats? Is it, high end, low end, mid level? What's all around it? What do the cars look like in the parking lots that are around it and that are in the parking lot of that property? What does the property itself look like, condition, that type of thing. Is there a value add component to the land itself? Is there extra land to develop? Can I add on to the building and expand the building? How can I maximize the property, or is it maxed out? So those are the types of things that I look at. And a lot of times sometimes a property will come across your desk where the price doesn't make sense, but maybe it's got extra room to do something. So I had a deal I did one time, it was an MLS property. It was listed, first it came out, and it was $500,000 for a house, right? And the house was worth like, I don't know, 250,000. I'm like, well, that's crazy. So but I said, there's something interesting here. It says extra land.
Mm.
So I looked a little deeper. Turns out the house came with 2 buildable lots.
Oh.
So I did my calculation and I said, okay, I can pay $350,000 for this property. I'm going to get 2 extra lots, or I can pay 250, whatever it was. It was like half of what they were asking. I can get these 2 lots. I can renovate the house, sell it, zero it out. My balance is 0 on the lots. So ridiculous offer. They were asking 500. Yeah, they said, hey, instead of rejecting the offer, they said, hey, we'll take the offer, but we need to stay in the house while we start building a new one somewhere else. So I said, okay. So what we did was, how much do you need down? They said we needed 50,000. I said, okay, I'll tell you what we'll do. We'll buy the property. We'll pay you 50,000 to use for the deposit. We'll hold the other 200 in escrow until you move out of the house and turn it over to us. Then we'll give you the other 200 to use for your new house. In the meantime, I'm going to start building on these 2 lots next door.
Right.
So while they were in the house for 6 months building their new house somewhere else, out of the area, I'm building 2 houses next door. They move out. I give them their 200,000. We renovate that house, flipped it, sold it for, I don't know, $300,000. So we got all of our money back and 2 free lots, built those 2 houses. I don't know, we put 150,000 in each one of those houses, and sold that. So all in all, in about 9 months, that deal, I don't think I was out of pocket more than 300 grand at any point in time, and it made $250,000.
Not a bad deal. When you can dig a little deeper into an MLS listing, that's pretty cool.
Yeah, I mean, initially the price was no good, but it said extra land. So you got to look for those little things. If it says extra land or room to add on or whatever, just because the price is bad doesn't always mean it's going to be bad. And even the ones where the ratios aren't that great, you just never know what a seller is going to do till you put it in writing. So I always say, just put it in writing. Even if the agent says, oh, they'll never take that, you never know what a seller is going to do till you put that thing in writing.
Yeah, I totally agree with that. Yeah. You got to put it in writing. You got to test them, and you got to retest them, right? So I've offered, I think my record is 5 or 6 times on a property over a 6-month period. Right. I never changed my number.
Yeah.
It just became more and more interesting to them as time went by. So, follow up.
I've had deals come back, as many as 5 years down the road after I made an offer. Yeah. People hung on to my information and I didn't follow up. They followed up with me.
Yeah.
So, I mean, that's another big one is follow up, but basically we're talking about deal analysis. So,
yeah.
So anyways, I look at everything like that. I look at what's the extra opportunity, what's the value add. Then, once we decide, okay, we're going to move forward with this, then we're going to get all of the, documentation to support all of the assumptions. So the property is being represented as it's worth X. We're asking X. The income is X. The expenses are X. So I gather all of that information and I start scrubbing the expenses, and I make sure that I know what those expenses should be and understand the area it's in, because utility costs can be higher or lower depending on where you're at. Insurance can be higher or lower depending on where you're at. Taxes are going to get readjusted to the new purchase price. So you got to change those assumptions. Look at their operational expenses in terms of management, advertising, legal, collections. Collections is a big one. A lot of people, in the extra income category, right? You'll see, late fees and collections. That's not always a good thing.
Yeah.
You want to understand what's up with that. And that's a revenue center, but is that a good thing? And maybe It could be. It's just how it works. So, and then you want to verify what's called economic occupancy, economic vacancies. And what that means is people can say, hey, we're 95% occupied. Well, that's great, but are they all paying?
Yeah.
So you might be 95% occupied, but only half of them are paying. So
exactly.
you got to verify what's called economic occupancy. So
very cool.
That's a quick high level view.
Yeah, you know what I would love to talk about, because again, you do things that I don't. Let's pretend a deal came across your desk and it was a couple of acres of just raw dirt in an area that has some development, so it's just not like cornfield somewhere.
Yeah.
What would you be looking for, right? So it comes across your desk. It's priced enough for you to go see it.
Right.
Are you driving around, a half a mile radius to see what's there? I mean, what does somebody with your skill level go, okay, there's a plot of dirt. I know I could build there, right? You've done it. But what do you look for as you're driving around trying to figure out highest and best use?
So, immediately what is surrounding it and what's going on around there. So is it surrounded by houses? If so, what price point? How are they selling? How long were they on the market? How many are under contract? How long were they on the market? How many sold? How long were they on the market? So you look at those things. Okay. If there's commercial uses, you look at what types, age, style, those types of things. So the first thing you got to determine is what is missing in that area. So if you're going to do a commercial development, is it office? Does it need to be retail? Does it need to be a coffee shop? Do they need a barber shop, a little strip center? Can it be a high rise, condo building? Maybe it can be townhouses. So you just kind of want to see what's going on around the area. Look at the sales and the demographics. Are there people just stuff selling in days where people are just snatching up anything residential? Is stuff renting and rents are going up and everybody's on a waiting list? Well, that means you could build an apartment building or something, right. Or maybe it's, depending on the size of the lot, It could be a little residential infill. You're just building townhouses or houses or both. It could be bigger where you can say, well, I can build, a couple hundred unit apartment building and there's no vacancies around the area. So there's demand, or it might be, man, there's a ton of houses, but there's no grocery store. There's no coffee shops. There's no Chipotle. There's no Starbucks, that kind of, there's no hair cuttery, whatever. Those things are out in your area. So you look at that and say, well, maybe there's a strip center that I can do all those things, and I can build above it, below it, behind it, around it. So that's kind of what you do. And you do look at that surrounding area because people tend to stay for course services within a very small radius of where they live.
Sure.
People like to live near grocery and shopping and things like that. So you want to fill the gaps with what's there. And if there's a ton of that, then you need more rooftops, if people are moving in and living there, and good schools and all that. So you look at what do the schools look like, all the basic fundamentals.
Okay. And then I'm curious, when you're sitting in front of that, how does your brain translate, I don't know what you would call it, time frames or phases, or, are you thinking 18 months from, dirt to lease up, or how do you transfer time? Because time's such a big factor.
Yeah, it depends on the size and scope of the projects. If we're building a few houses, 10, 12, 20, 30, whatever, a little small subdivision, that can be generally done depending on, so I'll understand first the municipality I'm dealing with. How
Sure.
long do the approvals, entitlements take? Generally 6 months to a year in most areas, could be a little longer, a little less. So just your approval process alone. Then how long is it going to take me to build what I'm going to build? Houses are generally going to take you, 6 to 8 months, depending on what you're building. Some you can do a little quicker if they're smaller. And what's the demand? What's the absorption rate? If I bring 30 units online all at one time right now, can I sell them? Some areas you can. Some areas you might need to phase that. So that's kind of what I get by doing my due diligence, looking at the surrounding area, talking to agents and people, and seeing what else is going on. If it's a multifamily project, if it's 20, 50, 100 units, that's going to be a 2 to 3 year cycle.
Okay.
So from the time you get it built, broke ground, get it, especially right now, get it finished and leased up, that's going to be at least 2 years.
Okay.
18 months to 2 years. If you're going 100 units and up, that's going to be 3 years. And it could be as many as 4 or 5 to complete stabilization, depending on how many units you're delivering, if it's in the 200, 300 unit range,
Right.
and beyond that, into the 500 unit deals.
Okay. Very cool. So I'm curious, when you look at everything that's going on in your business, and let's just think about the last 5 years, how much of it, and just a raw percentage is fine, how much of it is turning raw land into highest and best use? How much of it is buying something and doing some kind of value add? If there's a third bucket, what that might be.
So, probably 90% ground up.
Okay.
Especially on the commercial side, maybe 50-50 on the residential side, buying houses, renovating and selling them, as well as, building ground up infill. And then, a little bit of that adaptive reuse, maybe 1 or 2 projects here or there where I've taken a building and done something with the building itself, but mostly it's ground up. That's kind of where a lot of the demand is, and there's less competition, usually.
So why is that? Why is there less competition? That's an interesting word. Is it just people, it's too risky, too time consuming, they don't have the skill or money, or what is it?
All of the above. So it takes, a lot of capital, deeper pockets. It is more risky, from a capital standpoint and a lending standpoint. You've got to be strong. You got to be able to qualify. You got to have good cash. You got to be able to, have a long-term outlook. Most people are looking for that quick buck, in development. There's good fees to be made on the development side, but it's over the cycle of the project. So, it's not like an acquisition fee when you take down a multifamily property and you get paid as soon as it closes. On the development side, you don't get your money until the project's done. So you got to be able to do it, and, I spent a whole year working on 4 hotel sites. Now these are $30 million hotels, $30 to $40 million hotels, but just in the early planning due diligence stages of securing the sites, getting the pro formas built, putting together the deal decks, raising the equity, because this was all institutional stuff. I spent a year just doing that before we ever even started the entitlement process.
Wow.
Yeah.
Wow. All right. So that's interesting, right? So lots of ground up development. How many projects would you say you're, I don't know what you want to call it, evaluating, looking at in a month? I don't know how you want to clarify that. Yeah.
Me personally, my parameters and the things that I'm looking at are a little bit different, but every day I'm looking at one or two things a day, every day. Somebody's sending me something.
Wow.
And then clients that I work with, as I do some coaching and mentoring. And some of my clients in the multifamily space, I mean, they're looking at 100 deals a month, to get
Wow.
one. On the residential side, I've got some house flippers and wholesalers I'm coaching at a very high level that are doing, 7 figures a year. They're doing hundreds of deals a year. I mean, they're looking at, hundreds of deals a week, and
Wow.
talking
Yeah.
to hundreds of sellers a week to get a deal. So that's in the residential house flipping at scale where they're spending, $50,000 a month. And, they got to talk to a lot of sellers to get a deal. So on the commercial multifamily side, probably about 100 deals generally a month you got to look at to get one good deal somewhere in that thing. But
Yeah.
I'm looking at deals every day, a couple, 2 or 3 a day.
Okay.
Yeah.
All right. Yeah. And again, that's all network. That's all just letting people know you're there. It's having a proven track record. You're a producer, so people bring you stuff to evaluate. So,
Yeah.
uh,
Get my advice. Do I want to be a part of it? Just any number of things. Don't want to buy it. So it's just, yeah, I'm always looking at stuff.
so what part does reputation play in this? It seems like you've built your reputation up over decades, which is
Yeah.
awesome. I'm guessing you're getting lots of kind of first look opportunities at this point. Reputation is key or critical, you would think?
Yeah, I'm a closer. People know it. They know that if I step up, I'm going to close.
Yeah.
So, deals are always coming to me because they know that I've got resources and I can get it done and will get it done. So, I'm just, been in my region for 23 years, from North
Yeah.
Carolina up into DC. I was in DC yesterday. So I didn't get home till 8:30 last night, looking at deals and things like that. So, I've got some stuff I'm looking at, all over the country, but, um, it's, you know, it keeps you busy.
Yeah. And you're having fun. I mean, every week
Yeah.
I talk to you, you're smiling. It's pretty awesome.
I love it, man. This is what I do. I love it. I've got people all over the world that I'm working with, deals all over the country. I'm involved in, I'm looking at businesses and companies and those opportunities all the time. So I like to stay busy. I like to be out there. Reputation's important. The key for somebody getting started is making offers.
Yes.
So, brokers are going to send stuff out, right? They're just going to send stuff. So they want to see how you think, and how you respond to the brokers will tell them how sophisticated you are. And the questions you ask will let them know how experienced you are. So what you want to do is you want to ask the right questions, like we just talked about,
Mm-hmm.
in terms of the property itself, and you want to ask the right questions about the area that the property's in, and then make an offer. So the more offers you put out there, the more credibility you're going to build in the mind of the broker. Even if it doesn't cost you anything or take much time to throw out an LOI. It's non-binding. It only takes a few minutes. Now, I'm not saying just do it just to be doing it. You want to generally be interested and make sure the deal is going to work, but you show the brokers how serious, knowledgeable, and sophisticated you are by making intelligent offers through an LOI.
Yeah. Something I've always told new investors, right? The newbies up front, and it'll be interesting because feel free to tell me I'm an idiot or I'm wrong with this. Totally okay. But I tell them to get focused on an asset type as they're learning, right? Regardless, I don't judge what it is. If you want to do office, do office. If you want to do hotel, do hotel. I don't care. But, spend that first 6 months a year only looking at that stuff, because you just can't learn it if you're kind of scattered. Is that fair to say?
Yeah, I mean, you can, and it depends on your geography, and I think we've talked about this. If you're limited in your geography, you have to broaden your type of property that you're going to invest in. If you're going, to widen your geography and go nationwide, then you can be very narrowly focused on the type of property. And class and type are not the same thing. I say that all the time. There's real estate is an asset class. It's an alternative asset class. Within that are types of properties: residential, commercial. Within commercial, you have the 6 main types, and you have subtypes and classes within that. So like self-storage is not a class. Mobile homes are not a class. Apartments are not a class. Those are types. Then you have your classes within those. So again, language is important. When you talk to a broker and you start saying, yeah, I'm interested in the self-storage class of real estate, they're going to know you don't know what you're talking about, because it's a type,
Right.
and then there's A, B, C, and D within those different types. So just a little thing, language is important. That's how you kind of build that credibility and show them, hey, I know what I'm doing. I'm sophisticated. Even brokers will use that term wrong sometimes. It's an industry thing, but we got a little bit off topic there, but
that's okay. One thing I want to make sure we do in this episode, we haven't done enough of, is how can people follow you, right? Follow your YouTube channel. What type of folks should reach out to you for coaching and mentoring? Because again, you're giving us all this value, and I think lots of people want to reach out to you. So how can they first follow, and then how's best to reach out?
Yeah, so my website, gregdickerson.com, all of my social media is on there. So I'm on all the social media. I put videos up every day, just like we're talking about here. It's real stuff. It's how do you do this? How do you do that?
Yeah.
And, I've done it all, every type of real estate, every type of investing, and then the equity capital thing. So gregdickerson.com, it's all there. I've got courses for people that are video courses, and then I do some group, calls with that. So it's an online course meets coaching meets a mastermind. It's like there's nothing else out there like it. It's really cool. And then I do one-on-one stuff, a little bit higher level, and it's anything from residential. I've got a course on that. I've got a course on commercial and multifamily real estate syndication. I've got a course on real estate development, and a course on entrepreneurship, where I show people how to build their business online or off, create a platform, and generate revenue in their business by utilizing the platforms out there, and expanding their business, and put together online courses and stuff. So
Very cool.
it's a school of entrepreneurship that I've created. That's kind of what I'm really focused on, building that out. Eventually I'll have a physical location where people can come and take classes and seminars. So I'm really focused on that right now. So yeah,
Very cool. Very cool. Because I see it growing. So I just wanted to make sure we got out there.
Yeah.
I have a question totally from left field. And if you don't have an opinion or a thought, no problems, because we don't prep for these interviews. So there's this virus, right? Hunan virus, or whatever the heck, the big Corona. Thank you. And, I don't know. There was the SARS thing, a decade or two ago, but I really can't find any kind of historical evidence to go back and see what might happen to the economy, cost of capital, consumers. Are you looking at it kind of thinking it could hit the consumer, or have you pegged it, hey, that's an Asia thing, not really interested now? Does something like that even hit your radar?
Yeah. Oh yeah. I'm watching it, and you want to be sensitive to anything on a scale that this thing is growing, right? In China, they're shutting companies down. I saw a picture today of this building just with cots, thousands and thousands of cots lined up ready for people. And then if it hits this country and it's not contained, you're going to have a workforce, situation. It would have to be really huge to make a dent in the economy. But hey, Facebook, Apple and Google, they shut down operations, to send people home and get this thing under control. So, it can affect certain aspects of the economy, but this is a big world. It's going to take a huge epidemic, pandemic to really, throw you into a recession or make some kind of a big dent. But, airlines are shutting down, flights are shutting down, companies. So it's making an impact.
Yeah, I look at it this way. It certainly needs to be tracked. It needs to be dealt with, all that stuff. It's going to impact that part of the world pretty bad, at least in the short term. Kind of like the GM strike did to General Motors, right? They just reported today. They were shut down for 40 days.
But that was huge. So that's something that I felt on a personal level. I'm not going to feel this coronavirus on a personal level, but I drive a Suburban, Chevy Suburban, and I needed a part. And they couldn't get the parts because of the strike. They're like, dude, we can't get common parts because GM is shut down. So those types of things did affect me at the consumer level. Whereas right now, there's nothing in my area being affected by the coronavirus yet.
Right.
But who knows? It could.
It could, yeah. So I see airlines being hit. They had $7 billion with SARS, at least based on one report I read. The cruise industry is really in trouble, right? 3 cruises. Yeah. Already kind of in quarantine mode. That's not good.
Yeah, those things. Yeah, that's
just floating incubations, So yeah, it's going to infect that part of the world, no question. Let's hope it gets under control. But it affected cost of capital this week. Rates went down 0.2%, which when you have a 3 on it is significant. So.
And the stock market, they're always blowing in the wind. So whatever flavor of the day is going to affect the stock market as well. But it's really crazy. It's how quick this thing is spread.
Yeah.
In our lifetimes, we haven't seen anything like this, like a black plague or SARS was a big deal, but this I think is worse than SARS.
Yeah, it's highly So I'm just glad. Yeah, it hits my radar again. I don't think it affects the U.S. economy. It'll affect some companies, right? Like people doing manufacturing in China, which will be shut down for weeks. That'll have a 1 quarter blip. But yeah, if it comes here and explodes into the 20, 30, 40,000, that will impact consumer behavior. It hasn't yet, thank goodness, but it could. Right? You could see a trend where that would happen, I think.
Yeah, it's interesting. Crazy times we're in.
Yeah. All right. Well, I just wanted to see if I was crazy for following it. Glad I'm not. So, any parting thoughts before we exit this interview? It's been a lot of fun.
Yeah, it has been a lot of fun. We covered a lot of stuff, and you know, like you said, pick a lane, get out there, get with it. If you haven't done a deal yet, the key is to get your first deal done.
Yeah.
Momentum creates momentum. Success breeds success. Confidence builds confidence. So you got to start somewhere. Pick a lane, stick with it, get a deal done, then start rolling and expand from there.
Very, very cool. All right, Greg. Thanks for pulling over and talking with us today. We will talk next week.
Yeah, sounds good.
All right, buddy. Take care.